Hey, what is up, guys? It's Chris with Crypto Profit. I know it's been a little bit some time between my last video, but the crypto market right now has been a little bit weird. Nothing has really happened for the past 2 weeks. We've just been kind of consolidating. We finally had a move, but while we had the move, I had a lot of people give me a lot of hate and a lot of negativity. I kept saying that we were going down, and because I would post something on Monday and it didn't happen on Tuesday, people would start freaking out and start getting angry at me. They'd start saying stuff like, "Ha, we're not going down. We're not going down. We're gonna go up, Chris." And that's the thing, those are the traders that are losing. Those are the traders that are getting too emotional with the market. And I want to start off by looking at the S&P 500, which for those of you who don't know is stocks. And I want to explain something to you guys, right? Because just because I trade crypto, that doesn't mean I don't pay attention to other financial markets, and you guys need to be doing the same. So I want to start showing you guys some of that intermarket correlation, why I have certain predictions, why I look at things in a certain way, and I stay very calm. So we're gonna start off with the S&P 500, and we dropped a lot, guys, like huge numbers. We went from 2930 down to 2300. Like, we lost 2 3 years worth of progress in a week. And then we bounced off of the 200 weekly moving average, and then we bounced up, right? But what you guys need to understand about the market, the reason that happened is because the interest rates on the stocks went up. So when interest rate goes up, that usually means that the market is going down, because a lot of the people that are trading stocks are using leverage, and they're using money from the banks. And when interest rate goes up, money becomes more expensive because they have to pay a higher rate of return on that interest from the money that they're borrowing. So what that means is that the market starts to go down. However, once the market starts going down, that means commodities, which is stuff like gold, silver, crypto, tend to do the opposite. So if the stock market goes down, commodities go up. If commodities go up, the stock market goes down. Notice how when we went to 3150, we shot up to 4,000, and then we started going down. Now we're around $3,300, $3,400 area. What happened here? The stocks dropped in a week. We touched the 200 weekly moving average. We bounced up, broke the 100-week moving average. Now we're getting ready to test the 50-week moving average. If we break through, it'll continue to go down. If we get rejected, we'll see some range-bound trading for some consolidation before the market makes up its mind. But since the market is going up, crypto's doing bad, okay? So I don't really trade stocks, but the fundamentals are the fundamentals. And that's a thing that I've noticed a lot, is that a lot of people get stuck. They're either team bear, team bull, team stocks, team forex, team crypto, but it's all the same thing. I like to use the example of driving. Once you know how to drive, it doesn't matter if you're driving a sedan or you're driving a truck, you can drive a vehicle. It might take some getting used to, getting used to the size. You might not want to do some parallel parking, but it's basically the same thing, and it's the same thing with trading. Fundamentals are fundamentals. Investing is all the same thing. It's a lot of mindset, a lot of basics, and just being calm and collected in the market. It's longer term, putting in money and letting it do some compound interest. But it's all just line graphs, guys. So let's go ahead and go back into crypto now that I've done talking about the stocks. And we could see here that a lot of things that are interesting happen, right? So I'm going to tell you guys my target and why those targets are there. I know it does look a little bit messy, but don't worry. Look, we're ready to create confluence. So the 50-week moving average and the 100-week moving average are about to intercross. Once they intercross, guys, you're going to go ahead and trade below the 200 weekly moving average. That is a big deal. That hasn't happened at all, guys. Once we break through, we're going to move down from the 3,000 channel down to around 2,400, bounce around that area, potentially bounce back, or continue to go to the downside, and then our next target after 2,400 is going to be around $1,900. Okay, this isn't happening not tomorrow. This isn't happening next week. This isn't happening next month. This is something that's going to take months for things to happen, but you need to have an understanding of what's happening in the long term before you can start making decisions in the shorter term, right? So for the long term, we know that crypto is going to go down. We're not going to buy and hold right now. We're going to do some short-term trades, put in some money, pull some money out, get as much capital so that when we start hitting that bottom, we can buy a lot, and then we're going to keep that money in there for a while. All right? So let's go over to the 4-hour where things are a little bit cleaner. Let's go ahead and close our moving averages, right? So a lot of people I've noticed that are not professional traders, I can see why. Look, we're making a lower high after lower high after lower high after lower high after lower high. Right now, we just had a short-term reaction rally. And you would not believe how many people would get excited over a 0.5% increase to the upside. You don't see me freaking out. You don't see, oh, the bottom is in. We're going up to 6,000. I'm going to go ahead and buy some crypto. No. Stay calm. Stay collected. I have an open order right now at 32.50 because I think that we are going to break through the 200 weekly moving average. We're going to see a short-term bounce, but not as high of a bounce as I initially thought. I initially thought that we were going to have a bounce around this area right here, 3,900, 4,000, so that we can make a lower high. I actually think it's going to be a lower. I think it's going to be more around this area, 3,600, 3,700 area. A little bit more about that in the long term. But we keep creating lower high after lower high after lower high after lower high after lower high. And the bottom is in this time. You know, the definition of insanity is doing the same thing over and over again and expecting a different outcome. I don't see how you could say stuff like that we're going to the upside. Believe me, I am for crypto going to the upside. If crypto goes back up to 6,000, up to 10,000, my net worth doubles, triples, quadruples in monetary gains. I want crypto to go up, but unfortunately, the markets themselves are not telling me that, right? Stocks are doing good. Commodities are doing down. Crypto continues to go down. We continue to follow this macro trend of lower high after lower high after lower high. We haven't created a higher high for over a year. So unfortunately, just because I want it to go up, because that means my net worth doubles, that doesn't mean that's what's going to happen. So I have to do the technical analysis and do this responsibly and wait for the drops, do the short bound trading, so that when we buy right here, we sell up here, and do that until the market finally turns around. We start creating higher high, and not because we make one higher high, that means that all of a sudden the market's going to go up. Because right here we're at 4,000 and we made a thing at 4,100. That doesn't mean that the market all of a sudden is going to start turning around and we're going straight to 6,000. Once we break past 44, once we break past 46, once we start moving up in this upward direction, we start consolidating, building support and resistance above the highs, and we have a higher high and higher support and resistance lines, then I will start thinking that, hey, we could potentially start going up. But I am not trying to predict the market. The market has to prove itself to me that it's going to start going up by creating higher highs and higher support and resistance, consolidating above those lines and being able to hold those positions. So another thing that doesn't help, we have news like this. The CBOE withdrawing from the EFT, right? I would see news like this. We were at 3,600. Then when I would get news like this, the volume dropped. Right now we're at 7,000 and almost hit 3,000 for the 24-hour volume. That is extremely low. Very illiquid conditions. Declining volume. Everything telling me that we're going to go to the downside. And because we saw a 0.5% gain, people started freaking out at me, snapping at me, telling me that, hey, we're going up, and look what happened. The market went down just like I said it did, right? That's why I'm not losing money. That's why I'm not losing trades, because I stay calm and collected. And I know because we have a small move to the upside, that doesn't mean that we're going to start going up. Like I said, the market has to prove itself. You have to have a plan of action, whether we go to the upside or we go to the downside. Failure to plan is planning to fail. Anyways, let's go ahead and get over to the 15-minute, right? This is the area that we're bouncing around right now. We're consolidating. So I think we're going to consolidate for the rest of the week. That doesn't mean that that's what's going to happen. We could move up, we can move down. But things like this are not looking good for cryptocurrency, It's a lot better if we were to continue to drop down and we are bouncing around this Fibonacci level right here, and we are around the 3,300, 3,200 area. If we drop down to 3,300 and we bounced around that area and created consolidation there, that would have had me to believe that, hey, we could potentially be looking for a bounce above here, and we can go up to 3,800, possibly even 4,000. But right now, what happened is we moved down. We are consolidating in this area, and then we had to move up to the upside to get those bots and those algorithms to get the RSI levels to go up so that we can continue our descent. So moves like this are really bad for crypto in a bullish sentiment, because if we're consolidating in this area and we have a slight increase in volume to get these levels, that means that the next drop is going to be more savage. You hear the bigger they are, the harder they fall. That's kind of what's happening right here, where we're consolidating in this area. We get all those RSI levels to go up on the 15-minute, on the 1 hour, on the 4 hour, so that when it drops to a new lower high. That's not looking good, guys, because if we're move about this area, we go to this channel and bounce around this channel right here, that means when we move to the downside, we're going to potentially drop below the 200 weekly moving average. And once we drop below the 200 weekly average, that's going to be the first time in 4 years that we're trading below the 200 weekly moving average. Those algorithms, those bots are going to click, and things are going to start getting extremely volatile, extremely bearish. It's not going to be looking good for crypto to be turning around. I think eventually it is going to go up, but for right now, in the short term, micro scale, I think that it's going to be another 6 months before we actually start heading over and start seeing the beginning signs of a bull market. The reason I think that we're going to have a bull market, you hear a lot of the stories, a lot of the news of a lot of the infrastructure and all of the implementation of the technologies into the mainstream. That's good signs, right? The fact that hedge funds and big money is starting to get in here and setting that infrastructure for the next bull run has me in a very positive mood of us going to the upside, and there's us creating a possible higher high where our peak was at 19,000. I feel like the next bull run is going to be even higher than that. How much higher? I don't know. We'll have to look at the technicals. My job is not to predict the future, right? But for right now, that's not there. They're right now laying down the groundwork, letting it drop. A lot of the money are pulling out so that they can continue to go ahead and profit. So I want to end you guys with reminding you guys like what happened in the tech bubble. In the 1990s, all the tech stocks were all the rage. That's how Elon Musk made his money with PayPal and all that stuff, right? PayPal Mafia and all that kind of stuff. And when the bubble finally burst, you guys have to remember that Amazon stocks, all those tech companies dropped 90%. Amazon at one point dropped 99% of its stock value. And then now, Jeff Bezos is one of the richest people in the company in the world, right? Apple hit $1 trillion. The time to buy Apple, the time to invest in Amazon is not when they hit $1 trillion or Jeff Bezos becomes the richest man in the world. It's below that, guys. It's once things start heading down, once we start having despair. 2008, when the housing market crashed, that's when you guys start buying, and then you leave that money in there and you let it compound, right? You don't buy high and sell low. You buy low and sell high. So because things are going down, that's not bad, guys. You guys just have to be patient and not invest money that you guys are not willing to leave in there for a year or 2, 3, right? You guys need to use proper risk management. Don't over leverage, guys. If you guys don't know how to be consistent in trading, if you guys can't be a full-time trader, you guys shouldn't be leveraging with 1 to 100 or 1 to 1,000, right? Stay small. Focus on consistency. The way money is created is compound interest, not some lump sum amount. That's why people win the lottery and they lose all their money. Yet, Donald Trump can go out and lose, file from bankruptcy, and then in a couple of years you see him and he's one of the richest people in the world again. Why? Because once you understand money, once you understand the basics, once you know how to acquire it, it's a lot easier to maintain. If you've never had money, then you don't know how to keep it. So as always, remember to have a great day, and thank you guys for watching. Remember to do your own research. Watch other people, guys. Don't just watch me. Do your own thinking. Do your own technical analysis. Just because I think it's going down, that doesn't mean it's going to happen. It's good for you guys to look at people thinking that it's going to go up, people that are going to go down, people that are neutral. Then you make your own decision of what you think is going to happen. That's what's going to make you a better trader. But thank you guys for watching and have a great day.